Let's talk more about the Airbnb IPO with one of its original investors. Rick Heitzmann is founder and partner at Firstmark Capital. Rick, good to see you.
Good to see you again. How's everyone doing tonight?
Everybody's great. You still own shares at this point. Have you sold any?
I've sold zero. I've invested along the way, and awful happy to do it.
So I guess that answer sort of answers this question, but slightly different because you got in at a much lower cost basis. If you were to put fresh money to work at this moment in time, would you buy Airbnb stock at $144 a share?
I would. I think, differently than some of the stocks you've seen pop recently, Airbnb is really set up for either the kind of the post-vaccination world, post-COVID, where people will be traveling, and they've even built a great business during COVID. And, as you think about consumer brands going forward, Airbnb's become a verb for both hosts and guests. So the ability to build that marketplace and to be part of a kind of a permanent part of the 21st century economy is a rare position.
Hey, Rick, it's Tim. Thanks for joining us. Would you say Airbnb was helped or hurt by COVID? And if you look at how they were pitching this deal, they were certainly making it seem as if this was a very COVID-friendly way to travel. The great irony here is that they seem to have benefited from COVID.
It really is a great irony. They said if you would have told us in February that Airbnb wasn't going to be a public company in April, we would have been shocked. And if you would have told us in June that Airbnb was going to be a public company in 2020, we would have been shocked. So, originally, especially coming out of the early signs of China, I think the company was tremendously negatively impacted by COVID. And obviously they put in their S1, they had a couple months of negative revenue. They had more cancellations than bookings. But I think as all of us adapted, the company adapted, and now a quarter of its bookings are for 28 days or more. So, this work from home, work from everywhere culture, Airbnb is kind of co-opted, and it's become a work from an Airbnb, and they've captured that part of the market. And in addition, at least when I start traveling for business again, I'd rather not be around people. We don't need a big bar scene or a big restaurant. I'd rather be safe and secure in a place of my own. And I think that plays into clearly the direction that Airbnb was going on the business side. So I think that it originally started out as a very negative thing, and now it's taken advantage of the COVID tailwinds.
Hey, Rick, it's Dan. Congrats on another great exit. Here's the question I have for you. The word exit, right? There's a lot of different ways that private companies can come to the public markets. We've seen a traditional IPO like Airbnb and DoorDash today. We've seen past ones where, the direct listings, Spotify, Slack, that sort of thing. Your VC firm just launched a SPAC this year. What are you thinking about of all these different ways of exiting, the way you're advising your portfolio companies, and what does this week with DoorDash and Airbnb tell you or inform about your experience possibly with a SPAC going forward?
Yeah, what I think it says is that, the one-size-fits-all traditional IPO doesn't work. There was a bunch of different games that people tried to play to make sure this worked, but obviously, with all the people involved, and all the banking teams and syndication teams, price discovery was broken. You saw Brian Chesky's face when he saw the initial bid. He was shocked. You saw Tony's face from DoorDash yesterday. They were shocked. So I think that the price discovery and the mechanism of a traditional IPO isn't working for most companies today, and they're looking at alternatives. So I think there's a tremendous number of high-quality companies that are going to go out in 2021, and there's going to be kind of three paths. And I think you're going to see a diversity of ways the best companies go public. There's going to be traditional IPOs where people will still complain about them on Twitter for all the same reasons. There's going to be SPACs, which I think are going to get an increasing share of the best companies who want price and date certainty. And there'll be direct listings, as we've seen a couple great ones this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.